Hi everyone, welcome back to satokoworld Finance Academy. So we have been talking about what the real wealth is and then how to pay off the debts quickly. And last couple lessons we talked about the car loan. And starting on today's lesson, it's going to be a bit technical. So I hope you guys are ready for it. And today we're going to learn about TFSA, that is tax-free saving account. So this only applies to our Canadian subscribers, viewers here. So this TFSA is kind of equivalent to Roth IRA in US, however, quite a bit different. So I would like to create about the Roth IRA and an IRA for American viewers, but this one is only for Canadians and permanent residents in Canada. All right. So let's get started. So first of all, I want you guys to understand the differences between registered account and non-registered account. So registered account has tax benefit. Okay, how the tax benefits could be different, but some kind of tax benefit. Okay, and non-registered account doesn't have tax benefit, which means all earnings are taxed. And this TFSA is a registered account. All right. So how does this TFSA work? Well, simply said, all gain inside the account is tax-free. So this is what this means. Let's say you open a TFSA account. By the way, you can open TFSA account simply at any banks. You can just walk into the bank, or nowadays you can just open online as well. So it's very simple, okay? So let's say you open the TFSA account for the first time and you decide to deposit $1,000. And notice this $1,000 is after tax money, meaning if you're working for a company, the tax gets out, right, for your salary. So after the tax is out, the $1,000 is an after-tax money. Okay, so your after-tax dollar, $1,000 is now deposited, and in 5 years, this $1,000 become $1,500 from the gain. The gain could be from the interest, it could be the dividend, it could be the capital gain from the stock sale. You know, whatever could be, you gain $500, right? So now this $500, you don't have to pay tax at all. Now, do you hear it? Do you see it? So this $1,000 is already tax taken out, right? But this $500 gain, no need to pay tax at all. It's all yours. So this is simply said how this TFSA account works. Okay, so this TFSA account, it just started in 2009. So it's not too long ago. It's only 13, 14 years ago. So quite new. And who can contribute? Well, any Canadian or permanent residents over 18 years old who have SIN number. SIN number is social insurance number, right? And this one of the greatest things about TFSA, you can withdraw anytime and no penalty. If you might have heard of RRSP. So RRSP I will discuss in a next video. But RRSP, if you wanted to take the money out, until a certain age, there is a penalty, meaning you have to pay percentage of the penalty of what you withdraw. Okay, so there is no penalty, no taxes gets taken from the TFSA, okay? And then there is no upper age limit. So minimum wage is 18, but even if you're over 100 years old, you can keep this TFSA account. Okay, so now, what kind of investment can you hold? So this TFSA should have really been named tax-free investment account, because you can hold, this isn't really a saving account, you can hold investment inside. So what kind of investment can you hold? Well, simply, it's not really an investment, but cash, you can just put the cash in, like a bank account, right? Or you can have saving account, or specifically like high interest saving account I hold, if you were to have it. So what it does is, let's say you had high interest saving account, which is not too much, but still, like whatever the interest that you receive in a regular saving account outside of TFSA, you have to pay tax on the interest, right? But with this TFSA, you don't have to pay any tax on the interest that you gain, right? And now GIC you can hold as well. So what is GIC? That's Guaranteed Investment Certificates. And many of GIC is locked, meaning you won't be able to withdraw money, but you can have higher interest rate. So that's another interest as well. So you don't have to pay tax on that interest, income from the interest. And of course, you can hold stocks or bonds or ETFs. So ETFs are exchange traded funds. If you don't know what ETFs are, I will explain to you maybe in a few videos later. This is my favorite things, ETFs. And also you can hold mutual funds as well. And by the way, I don't like mutual funds. But yeah, those are the things you can hold within the TFSA account, all right? Now, there are some rules to TFSA. So TFSA, it has limit to how much you can deposit, okay? So remember TFSA, it got started in 2009, right? So and every year there is a limitation to how much you can deposit, okay? So from 2009 until 2012, the limit was $5,000 per year. And 2013 and 2014, it was $1,500 a year. And then 2015, just this year, it went up to $10,000. And 2016 to 2018, it was $5,500. And then 2019 till this year, 2022, the limit was $6,000 a year. And then next year, 2023, the limit is going to be $6,500 a year. So this is a limit per year. However, there is a great news. Let's say if you just found out about TFSA and you were born before 1991, right? And you can actually, as of in 2022, you can actually deposit up till $81,500 into TFSA, because the whatever you didn't use, the unused part, it gets rolls over from 1 year to the following year. So this is a great thing about TFSA. And most of the people probably won't be able to max it at once, but yeah, definitely this is a great vehicle to use, because mostly this is all the gains are tax-free. And if you have lots of money sitting in the bank and just in a regular, non-registered account, and you just found TFSA, make sure to take advantage of it, okay? So let's say you just found out and you deposited money, and if you max out your total limit and withdraw money, you can replace it, but you have to wait till the new year comes. So this is an example here. Okay, so last year, December 1st, so December 1st, 2021, this person deposited the max dollars. So last year, it was, this was this year's max. So let's say 6,000, so 75,500. So as of 2021, the maximum he could have deposited in the TFSA was 75,500. And then January 1st, 2022 comes. Now he can deposit $6,000, additional $6,000. Now he maxed out of 2021. But now June the 1st, he needed $1,500. Remember, there's no penalty. He can withdraw anytime. So he withdrew $1,500, right? And now he wants to put the $1,500 back in September. But no, he shouldn't do it. He can't do it. Okay? Well, he can technically, but he shouldn't do it because now he has to wait till New Year comes to deposit $1,500 back. Okay? Because TFSA, it doesn't see how much money you actually have in the account, and it counts how much deposit you made, okay, per year. And so now 2023 comes, he can deposit the $1,500 back, and also the 2023, the maximum limit, $6,500. Of course, he doesn't have to deposit $6,500 on January the 1st, but he can take whole year to deposit up to $6,500, and then plus the $1,500 that he withdrew, okay, in June, right? And here is the reason that you don't want to over contribute. So over contribution, they charge penalty. So how much the penalty is? The 1% of over contribution monthly. So you really want to make sure that you don't over contribute, okay? So you can have as many TFSA account, each bank or whatever you want to do, but the maximum amount that you can deposit is going to be the combined amount, okay? So make sure it follows the limit, and then make sure don't over contribute, because they're gonna give you the penalty here, okay? So today's lesson was the overview of the TFSA, tax-free saving account. Thank you for watching, guys. If you want to work with me one-on-one and expedite your financial health, please email me at satokoworld@outlook.com. satokoworld@outlook.com. If you still haven't, please subscribe. And if you like, please press the like button. Arigato. Well, thank you. Arigato, that was in Japanese. I have the Japanese channel as well. And I'll see you guys on our next lesson. Thank you, guys. See you.